Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, February 21st at about 12:30 p.m. Eastern. Well, stock indexes are falling today after data showed U.S. business activity stalled in February and a spike in new coronavirus cases in China and elsewhere is sending investors scrambling for safer assets such as gold and government bonds. Declines are led today by Microsoft, Amazon, and Apple. That's for a second day. We were trading at all-time highs a couple of days ago. So let's take a look. Today, we're going to look first, as we always do, at a daily chart of the S&P 500 SPDR, SPY. As you all know, this is the tracking stock or exchange-traded fund that closely follows our S&P 500 index. In fact, if you just take the decimal point on this chart and move it over to the right one, you'll get one digit. You'll get approximately the going numbers on the S&P 500 itself. Today, when I captured this chart, the SPY was trading at $334.20. It made a new all-time closing high, yet another one this Wednesday at $338.34. or about 33.83 on the S&P 500 itself. Now, if we look down at the RSI, which we've been watching for some time, it is dropping now. It's down to just a little over 55, so it is no longer overbought. We did make note, I believe, last month that we were getting a negative divergence here on the RSI, with the RSI making a higher low, as you can see, and the market itself making a higher high. So many times price will end up gradually, not in a few days, but gradually following this indicator. So you can't use it as a short term, but certainly in the long term it does show us what could happen in the future, and that is happening right now. The SPY is falling, as you know. Again, it made a new all-time closing high at 338.34 on Wednesday. Now, if we look down the MACD signal line, the red line here is now closing into, no longer above, but now trading along with the MACD line itself. That's just a very slight negative. Now, if we look at price resist or support here on the SPY, we see it coming in at 331 down here, and we can see where the 20-day moving average, the red line, is coming in. That could potentially offer a little bit of support. So we have support there at 331, 330. We have it on down at 326, right up in here. And 326 is where the 50-day, 326.81, we can call it 327. That's where the 50-day moving average is coming in. Now, as you see, I drew a trend line from October lows here all the way up to January lows and extended it. And interestingly enough, this trend line matches up almost totally and completely with the green line, the 50-day simple moving average. So if we have moving average support here and trend line support, as well as some price support, which we can find here, then that makes this number 326.81 right now, or 32.68 on the S&P 500. That makes this a pretty important line that we would like the SPY definitely to stay over. Of course, then we have January lows down here at 320, which could offer more price support. So lots of support if we need it. We are still trading in an uptrend. We can't complain about that. However, the coronavirus keeps expanding, unfortunately. It may keep our risk somewhat elevated in the coming week, and hopefully not, but potentially even longer. I'm continuing to trail my stops under my positions, and I'm taking a few profits here and there as I want to keep my profits safe and have some cash going into March. And remember, as I always say, anyway, cash is always a position. Now let's go on to our next chart, which is the Invesco QQQ ETF. As you all know, the QQQ represents the NASDAQ 100, very important index in the market. And of course, it is the top components are the big dudes we just talked about, the Microsofts, the Intels, Facebook, Amazon, Apple, Alphabet, all of those big momentum stocks are right at the top of the list here of the components in the NASDAQ 100. Now, when I captured this chart, the QQQ was trading at $231.31. It closed at an all-time high this past Wednesday at $236.98. So we were good until then, but reality is starting to hit here a little with this coronavirus, and that's very, very unfortunate indeed for the world. We can see here the RSI is no longer overbought. It's come back down now below the 70 line. It's down at 59, and the MACD signal line is closing into the MACD line. Not a big thing, but just something to pay attention to. Now you can see this trend line is coming up here. I drew it under these lows, and they're my crayons, so but this is totally legal. So we hit 3 lows here. Back here, October, we hit the end of November lows. We hit the end of January lows. So this trend line is pretty strong here. The QQQ has been making new highs for the last 10 days or so, trading days. And again, as I said, it closed on Wednesday at 236.91. At 236.98 at their new all-time closing high. Now, price support comes in here, down here at 228, where the 20-day moving average comes in along with price support. So that's nice to have price support and indicator support. So we'll see if that matters, if that can hold. We're looking down again at 226, where this price support comes in. We also have trend line support down here at 224. We can find more at 223 all along here, and down to the 50-day moving average, which is coming in at $220. So lots of support if we need it. Still definitely in an uptrend. And you know, we were stretched really tight here. So a retracement, coronavirus or not, a retracement does make sense. It's just been getting a little stretched too tight here for the last month or so. We'll see in the coming week now if the QQQ can stay at these levels or if it needs to pull back a little more. Again, I am taking some profits and I'm raising stops on my remaining positions just to be on the safe side. Now we're going to look at a chart we haven't looked at, I don't believe, in a long time. I'm getting very conservative here. This is the Invesco Dynamic Food and Beverage ETF, symbol P like Paul, PBJ. It has 30 components in it. The top components are Mondelez International, Coca-Cola, Hershey's, PepsiCo, General Mills. Now looking at this daily chart, if we look way back, and I'm not sure we can see this on the daily chart, you can't. Yeah, you can. The PBJ made a relative low down at 32 and change back in May. So that was down lower. That was down right about here, a little earlier on this chart than you can see. Then it trended higher and it made a nice move higher up to a high of 35.79 in September of last year. Then in the last quarter, it fell again, and that makes sense because when tech stocks are rolling higher and semiconductors, as they have been, moving a lot higher, stocks like these most of them are consumer staples, so they're considered, at least in this particular arena, to be very unexciting if you can put your money in a Microsoft or an Alibaba or a Facebook. So food and beverage stocks did roll over, at least in this particular series. Then it moved back up, made a head and shoulders here, moved back over the 50-day moving average, made a very shallow head and shoulders here in November, December, January, moved back down to retest these lows right around 33 and change. And then is now heading back up, hopefully to break back up into this head and shoulders region here. I'm thinking because this is a very defensive play. It's a Food is a consumer non-cyclical again, and most of these companies are consumer staples. And they typically come in to be very handy when you have a market moving south. After all, it's food and we have to eat. Now, in the coming week, if the PBJ, as you can see here, it found support at 33 from its prior lows in November, and now it's starting up. And with so many stocks overbought or have been overbought recently, this is a treat. So we're watching this come up now. The PBJ has gone above its 20-day moving average. It's bumping its head today on the 50-day moving average. Interesting that this is up in a very down market today. That's something I always like to look for. So it's trading right now at $33.85. In the coming week, if the PBJ can climb over this 50-day moving average and move up and over, say, to $33.90, I may add a small position to my trading portfolio. Then, if it can continue to move over the 200-day moving average, this line, which is now coming in at 34.09, and I know that's not a lot higher, but I want to make sure it gets over that line, then I may add to my position. My initial stop is going to be down at 33 under this low here and the prior low. So this is a very mild-mannered trade. It's not an exciting trade. But if the market continues south, food stocks may be a good place to hide out. So if the PBJ moves higher and continues up, naturally I'll continue to raise my stop. So you may want to keep an eye on the PBJ in the coming week. And now for this coming week's economic reports. On Monday, not much going on, nor on Tuesday for that. We're still in earnings season. Wednesday, we have new home sales and crude inventories. Thursday, we have jobless claims, durable orders, the GDP, and nat gas inventories. And on Friday, we have the PCE, University of Michigan, and University of Michigan consumer sentiment. Now, just to let you know, next week we'll have a brand new online training to introduce to you, Increase Your Profits Trading ETFs. So stay tuned. Check it out on ToniTurner.com. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.